Meta just offered more than $200 million for OneMind. That's what it reportedly took to lure Apple's top AI researcher, nearly 3 times what CEO Tim Cook made last year. The Facebook parent company recently poured $14.3 billion into Scale AI, a data supplier for generative AI, and tapped Scale CEO Alexander Wang to lead a new Superintelligence Lab. Now to staff it, Meta is going all in, aggressively poaching top researchers from its biggest competitors. In a July 14th Threads post, Mark Zuckerberg said, "For our superintelligence effort, I'm focused on building the most elite and talent-dense team in the industry. We're also going to invest hundreds of billions of dollars into compute to build superintelligence. We have the capital from our business to do this." OpenAI CEO Sam Altman says Meta has offered $100 million signing bonuses to lure OpenAI staff. Meta has now hired at least 10 OpenAI researchers, including key developers of GPT-4, plus top talent from Anthropic, DeepMind, GitHub, and now Apple. Its latest win, Roming Peng, who led Apple's foundation models team. Apple reportedly chose not to match Meta's offer. Now the head of recruiting at OpenAI harshly called out Meta's tactics, posting this on X. "It's unethical and reeks of desperation to give people exploding offers that expire within hours. Meta, you know better than this. Put people first." Now online, it's being called the 2025 AI Draft, a tech talent arms race with 9-figure offers and Silicon Valley engineers being treated like first-round picks. Meta is not just trying to catch up, it's trying to own the next phase of artificial intelligence. And some say the industry's best minds are vanishing into just a few big tech vaults. Now, I spoke with experts to unpack why Meta is betting so big, who's getting left behind, and whether this AI talent war is speeding up innovation or concentrating it in too few hands. Now to start, we turn to Gene Munster, an asset manager who's been tracking this shift closely, to break down what Apple's talent loss means for Meta's momentum. Now Meta's making huge AI investments, $14.3 billion into Scale AI, plus massive compensation packages to staff its new Superintelligence Lab. How much can Meta afford to spend to get ahead in the AI race, and how is this strategy impacting its financials in the short term, if at all?
So in terms of how much they can spend, it's a boatload. And think of this in terms of $50, $100 billion a year, which may seem hard to really wrap our heads around. But the reality is that Zuckerberg believes that that AI is this next paradigm. And ultimately, the company needs to be an AI first company, which means that if they land that, they will be prosperous for decades to come. And if they miss that window, they could face ultimately just a declining business, a diminishing business. And so when we think about these pay packages that these top talent are being offered, it really is small in the context of what's at stake for Meta, multi-trillion-dollar company. And in terms of can they afford to do this, the simple answer is yes. I mean, they're generating about $75 billion a year in free cash flow. And so they also have a war chest of cash to fund this. And so the reality is that the business can continue to sustain this $50 billion plus in annual investment in AI for multiple years to come and still be profitable.
And how big of a blow is it for Apple to lose Roming Peng, the executive leading Apple's foundation models, to Meta? And what message does that send about where the two companies stand in AI right now?
So it's a loss, undoubtedly. If I was going to probably put in a context of between 1 and 10 in terms of the significance of the loss, it's probably a 7. And so there's an important dynamic here is that from one perspective, this is a very high-level, sought-after person in the AI race. But there's another piece to the story, which is Apple has been struggling with trying to get their fit around AI and trying to get the AI, Apple Intelligence, to work more seamlessly with their existing products. And so there is a case that maybe Apple didn't want to pursue a bidding war here, and ultimately they're okay with some change of leadership with AI. And so I think that that's one piece. It's a loss, but maybe not as much of a loss as what would seem the headlines. But it does beg a bigger question, is that even there is just more movement in terms of the leadership when it comes to Apple and AI. And I think it does speak to this reset that's going on inside the company to try to find its path forward. And that reset is really focused on one event, which is a more advanced series that they've said is going to be out probably around June of next year. And so from the perspective of Tim Cook, he can handle the loss, some talent loss, but they need to quickly backfill or partner with other companies like Anthropic or Perplexity to try to get their AI integration up to speed by next spring.
And Bloomberg says Meta offered Peng more than $200 million. Apple did not match it. Do you see that as financial discipline or a strategic miss at a critical time in AI?
Apple has the resources, kind of similar types of cash flow that Meta does. They can invest. They could counter on an offer. They're looking at probably at the rest of their AI talent as well. There is an effect of if you do pay up for somebody like this, then the other lieutenants around people can want raises too, and so they needed to be aware of that. But I think the bigger picture is that even with those other raises kind of across their AI talent, even if that would happen, Apple can still afford to do this. I think at the core of what's going on here is Apple needs to reset their AI strategy. And in some respects, changing the leadership within that may actually be a good move. And so I think that they have the ability to do it financially. They opted not to do it, which I think tells us a little bit about how aggressive of a reset that Apple is really pursuing to deliver on this next series next spring.
So now we've seen Meta shares climb about 20% this year through mid-July, while Apple is down around 15%. Do you think Wall Street is starting to reward companies that go bold on AI, even when there's backlash?
I think what we're seeing with Meta stock is telling. Meta was behind the curve when it came to AI. Llama had been a little bit of a lagging model. And as Zuckerberg has shown that they can use AI to improve their user engagement over the past several quarters, the stock has been rewarded and additionally rewarded as they've come out with the Superintelligence Lab. And so the simple takeaway is this: investors understand that AI has the potential to be much bigger than internet or mobile combined. And in that context, any sort of increased spending is going to be rewarded in the stock price. And I think that if Apple would take a page from that book and be more aggressive, not just on talent, but on maybe potentially an acquisition of something like Perplexity or a further partnership with somebody like Anthropic, I think that their stock would be well rewarded for showing investors that they mean it when it comes to being real in AI.
Meta just acquired Play AI, with the entire team reportedly joining the company, and it's just the latest in a string of aggressive moves to snap up AI talent. Do you think the strategy will pay off?
So the simple answer is I believe that the strategy of investing aggressively, whether it's through acquisition, partnership, or hiring, is the right approach. And part of it is a view that AI, that the substance of it is going to exceed the hype. And obviously there's a lot of hype, the substance being bigger than the mobile or the internet combined. And so I think that these moves, what you're seeing with Meta more recently, is evidence that this is still early. I think that's another important takeaway on these talent acquisitions, and that the return on investment, if you believe that people like Zuckerberg are competent, which I think he is, then that the return on investment will ultimately present itself. Another kind of takeaway from this whole conversation, if we think about what's going on the hardware side, like companies like NVIDIA, all this spending on talent from Meta, I think it is going to be representative of more spending on infrastructure too. And when we put it all together, a few months ago, I thought that we're 30% of the way into this AI paradigm shift. And now I think we're probably only 20% of the way there. I think we're actually earlier than what I believed when we see these moves on the talent side and what that means for the infrastructure side.
If Meta succeeds in building superintelligence or even just dominating the open source AI space, do you think it changes what kind of company Meta is in the eyes of investors?
There's a big opportunity for Meta on their existing products that we know and use so often, Instagram and WhatsApp, and to inject AI into that, content creators, advertisers. But there's also a whole business that they could create. Think of this as like an AWS, a Google Cloud type of business that is built around their models. And I think that that's a piece. Zuckerberg has famously talked about getting to 1 billion users. And that may be the other part of the Meta story that isn't really fully captured in Meta's valuation, is this concept that they can start to build like an AWS competitor that ultimately services and offers its own models. And so that would be an example of a new business that they could get into based on all this spending on talent.
And what can other big tech companies do to catch up in recruiting and retaining AI talent?
Well, ultimately, I think that these engineers realize that the next 5 years is a golden opportunity for them. And unfortunately, I think that these large paychecks are going to yield continued movement inside these companies, whether it's acquisition, acqui-hires for talent or individuals. And so what can other companies do? They can try to basically compete with these offers. And unfortunately, in the world of AI and research, it's not about loyalty necessarily to a company. A lot of times it's loyalty to research teams and really well-respected AI leadership. And so that's an effective move, is to bring over these well-regarded AI leaders, and then they bring in additional talent. So unfortunately for all these companies that are involved in this race for talent, the reality is they're just going to have to spend up to maintain the talent.
And finally, we spoke with the investor who called this Meta's do or die moment to break down how far this battle could go. Mark, thanks so much for joining.
Thanks. Great to be here.
So you've said this moment is critical for Meta, that their entire strategy is riding on AI. Why is it such a make or break moment for the company?
If we look back in history at similar moments like this, when we had the browser wars way back when the internet was just a baby, we saw the negative effects that can happen to a company, even like Microsoft, who is a little bit slow to the game. And we're witnessing now, an underperformance by great stock still, Apple, because of their possibly missing the AI opportunity. Well, I think Zuckerberg took a look at his history books and decided he wasn't going to go down in history like that. Clearly, we're in a massive AI race, arms race right now, and up till now, it's largely been a who can acquire more GPUs type of race. Like, it's a hardware based race. How quickly can you build a data center? But very, very quickly, as we've learned also in history, arms races don't generally work out, and usually the one with the deepest pockets wins. And that's not necessarily a good strategy. So I think now you're going to start to see a shift, and kudos to Zuckerberg for realizing that we're going to shift away from hardware to let's talk about AI talent, right? It's going to be more of an intangible asset arms race, where now they're going to seek to build moats around their businesses by acquiring the smartest talent. Now, traditionally, we defend intellectual property with patents and copyrights and so on. But we see that AI right now is so fluid that really applying for patents and applying for all these copyrights, 2 days in, you could be already obsolete. So the way to really ensure and build a moat right now is to hire the greatest talent that's out there. And right now, it's a very small talent pool. So in fact, right now, going after these talented people that are on the forefront of this technology that really leapt upon the industry, it makes a lot of sense to go after this top talent. And because they're so scarce, laws of supply and demand apply in this case. And low supply means we're gonna pay up for that. And if you take a step back and you look at how companies traditionally do this, they do it through mergers and acquisitions. And in this case, there's not a lot of companies to acquire. And in fact, whatever companies there are to acquire, they're just so overpriced in valuation, it makes absolutely no sense. And let's be honest, in cases like this, a lot of these startups that do have these AI technologies, a lot of them would be acquired not necessarily for their creative nature, right? So we're not acquiring them because they have customers or because they have revenues. we're acquiring them for their intellectual property. And that in normal cases might be patents and copyrights and so on and licenses. But in this case, it's know-how, it's talent. So it makes perfect sense. And when you talk about a number like 100 million plus for a team, that sounds on first glance like, oh, let me go check my inbox to see if I have any offers. That's the first thing you're thinking. That's impossible. But if you think about the valuations of a lot of these AI startups right now that have no proven track record, but maybe one or two smart folks working there, $100 million plus for an acquisition seems like a really good deal.
Yeah, and I want to go back to that $100 million number you just mentioned. Meta's reportedly offering $100 million plus packages to lure talent from OpenAI, Apple, and Anthropic. Can anyone else realistically compete with that?
Oh, absolutely. We're watching very closely and waiting with our ear to the rails. When is Apple going to jump into this race? Apple can absolutely afford to compete in this race, and many expect them to do it. Apple historically is not an acquisitive company. They like to develop from within, although I think they, at some point, are going to be forced to start acquiring this talent. They seem to be losing more talent than they're gaining. So it's about time that maybe Tim Cook breaks out the checkbook and starts to look and see what might be out there, and taking a play out of Zuckerberg's playbook over at Meta.
And is Meta overpaying or making a smart long term bet here?
I think it's a really smart long-term bet for Meta. If you look at the numbers, if you're an M&A person over at Meta and you're thinking, oh, I can acquire these startups with maybe 10 people for billions of dollars valuation, or I can go out and find top talent and I can acquire them for hundreds of millions of dollars. Again, if we just forget the absolute number, if you just look at the comparisons, it seems relatively inexpensive to make these acquisitions, to be not only defensive and build a moat, right? Protect against the others that you're going to compete with, but also be offensive, right? Anybody can buy a GPU from NVIDIA, right? So it's just a matter of how smart you were, how strategic you were, how many dollars you throw at it. There could be competition in that area, building data centers. We see sovereign governments getting into building data centers now. So this is a place where you can compete with a sovereign government that can throw billions and billions of dollars at building data centers, but they don't have the talent. They don't have the sheer talent. And we see, again, we learned a big lesson, last year when we saw DeepSeek come with very, very little assets out of the shadows and really sort of, throw a spanner in the works of what we all thought was a US dominated market. And there you're talking about talent, not necessarily how many GPUs or gigawatts that you can put out.
And with Meta acquiring Play AI, could this kind of talent arms race ultimately lead to cultural or operational issues inside Meta?
That's a really great question. And that is a fundamental mergers and acquisitions question, right? So there's always that challenge of realizing those quote unquote synergies that you hope to get. That's why you try to be as strategic about it as possible. In this case, as we're learning, unfortunately, I think a lot of these companies are now more reactive, right? So they're just land grabbing as much talent as they can get. Whether Play was the move ultimately, or just two or three of the people at the company, that quite possibly would be the case. But someone's doing the math there, saying, what would it cost for us to get those those players, and what would it cost to buy the whole company? And the math in that case most likely came with let's just acquire the whole company. We get an entire team, knowing fully that most M&A deals never fully, unfortunately, realize the synergies, mainly because, as you asserted absolutely correctly, people issues. So if you get 20 people, you hope that there's not a significant dilution of culture that may be prevalent, or vice versa. You may be bringing in a culture that may be not present right now at Meta that Zuckerberg may want to bring in. And you've seen it work both ways, but unfortunately, you've also seen it where it has been detrimental. And let's hope that they were smart enough to sort of make those decisions early on before they decide to pull the trigger.
Thanks so much, Mark.
Thank you.
So Meta's building a superintelligence lab, and it's stacking the bench with some of the industry's best. But as talent flows into fewer hands, the future of AI may depend on more than just who can pay the most. For Investors Business Daily, I'm Claire O'Connor.